Welcome back to the rationalinvestor.com's daily brief. The answer to your question is learn the goddamn process, trade your trading plans, don't take too much risk on any one trade, and just let yourself get rich. Hello, everyone. Welcome back to the rationalinvestor.com's daily brief. Great job on Chris's party. Such a professional. Having us all ready to go. Of course, Brian takes a sweet time getting these things going, but it looks like we've got the show up and running, so that's good to see. Let's see. We got this Zoom call. The participants are over here. Let's see what's going on there. Glass Insight says hello. Yeah, I had the basically the power was shut off in my local building here yesterday. So my apologies. Any of that one that was looking for me to be here yesterday, unfortunately, I wasn't. I know this is normally Julian's day. So my apologies there, but hopefully we'll give you some half decent value here, and hopefully enjoyed Stuart and Julian's offering yesterday. From what I understand, it went relatively well. So as you can see from the market, unfortunately, our breadth indicator is just not happy right now. And actually, we spent a bit of time in a meeting this morning trying to figure out what the heck went wrong here. Still scratching our heads. Something is broken in the back end, but we just can't quite figure out what it is right now. But anyway, we are working diligently on trying to fix it. And we will give you guys all updates and stuff as to how that process is going. If anything, we kind of decided that we're going to dial things back a little bit. Maybe we don't need to watch the entire universe right now. It's just a little bit too much of a job for us to manage everything. So don't be surprised if we actually dial a little bit of this back, trying to get our ship on the right course again. Good part about it, of course, is I think on balance, our commentary about did you get your shit together? All that kind of stuff. Looks like a page crashed. But anyway, I did see that Stuart had said that he got the crypto FA. So at least we have our list of the fundamental names we've invested in on the site again for you. So that's good. And his portfolio has moved up substantially. So anybody that has participated in any of these names that Stuart has been investing in, I think you've done pretty well. I don't think the balance is $13, but I think on balance, you should have done fairly well with that. And I suppose maybe Stuart is just updating this. But my little old lady portfolio that I've been running, kind of fun to watch the little SOL portfolio that we have up and running, moving up nicely. So if you followed any of those names, hopefully you're doing relatively well. And where's the best place to show you this? Our little old lady portfolio here. I think I went through it actually on Sunday with you guys. Just name after name after name after name. And most of them are actually up quite a bit. If not doubles. Of course, I made, silly phallical references repeatedly because I was a little bit under the weather, and unfortunately my mouth runs away from me when I'm feeling sick. But long and short of it here, these names have all done fairly well. I really don't think it's a good idea to go panic buying into crypto right now. I've been warning you guys repeatedly of late. We are coming up to a massive fundamental event in this space. We also have a celestial event, which I think is going to have a significant impact on the humans and probably the broader stock market. In fact, actually, yesterday while I was away, I was reading WD Gann, and it's interesting how we had that eclipse window there last fall. And actually, I don't think enough of us even made reference to this. I did find it fascinating, and I was looking at this on the S&P 500, that this is almost an absolutely perfect WD Gann kind of quarterly move in that from the end of October into the end of the year, January, that was almost a perfect 90-degree turn on the calendar, if you will. And now we're 180 degrees coming into this next eclipse window here. I don't think that this is I don't know whether you can say it's on purpose, but I definitely don't think that this is an accident, that this has actually played out the way that it has. Are we at the end of this run just yet? I don't think so. If we just look at things like Feigenbaum bifurcation, sort of first stop kind of targets for chaos theory, that's a little bit higher. And also notice this AB equals CD, that's a little bit higher. So and actually what I would expect is I would expect this to actually pivot on the end of this eclipse window. Notice the eclipse window last fall when we went into this, if you had said that first eclipse event was your pivot, you would have been sorely mistaken. Hey, the market kept moving lower, and it wasn't until after that second eclipse window was finished that the market actually pivoted and went straight up. So I really would not be surprised if whether it be something like Bitcoin or whether it be something like the stocks, that this actually takes the entire window to play itself out. And we won't really get sort of what does that new world look like kind of idea on the other side of this eclipse window until exactly that, the other side of this eclipse window. So with that said, am I like calling a top on things like Bitcoin here? We're not even a month ahead of the halving event. That's next week. And if I understand correctly, we've got the FOMC coming up here shortly. And I would actually expect lots of fireworks in and around this area on the chart, not here. So believe it or not, even though the market is coming off a chunk here today, I don't think this is actually it, but who knows? I mean, are there some major sort of bigger picture variables going on here that are driving price here in the short term? Absolutely. Um, if you aren't aware, third Friday of the month is options expiry. This is going to be the monthly options expiry. Also, too, this is a big quarterly contract, March. The big quarterly contracts for the institutions are March, June, September, and December. So a lot of people that sort of like saw the pivot there probably in the stock market last October just simply said, buy me the March calls. So I was even getting notices in my email from Interactive, March options expiries coming up. You've got some on the books, Brian, you better pay attention. So I would actually make the argument that probably what you're seeing here in the market today and a lot of the sort of gyrations that we've seen, for whatever it's worth, all the day traders, we have fun in our little day trading room on the site. Ironically enough, it's just yet another example of Mr. ICT's wonderful setup. It's quite remarkable how consistently this damn thing is firing. So, we had heading into that inflation number this morning. Market was getting bid up. Inflation numbers came out in the US about 5:30 a.m. So that was right on this event. And you can see the market did not like at all that event. You could argue that the news release, the market was already, ironically enough, topping out. The news release itself created one of those fair value gap kind of just big panic dump events that broke the previous sort of bullish market structure heading up. I think he likes to look at like a 10-minute chart to see those structural events. You can see the big dump out. And on that event, that brought the market all the way down here. So what I typically do is just follow this along, and I'm just drawing my mountain man level. I want to try and get short off of mountain following this market structure break and a rally back into that range. I had to be very patient here and really, really work this order. But you can see I finally got filled here up at 1893.75. And then the market just absolutely puked out. And on the 877 tag, I was like, that's it, but it might as well just ring the register and get the hell out of there. And frankly speaking, that probably wasn't a terrible idea. I wouldn't be surprised, actually, this probably sets up like bearish bot setups now. You can see the three lower highs. I don't know whether this is let's see, 33 to 66. Of course, whenever I draw this, it's always backwards. Boom, boom. So point of the matter is there's 66. So we didn't go beyond that. So this bot actually is technically still alive. Then we come over here to the bot trade. And of course, it's always backwards. And so we'll flip that around. And oh, what a surprise, right off of that structural level. There is your bot. So, you could argue that this is sort of your value trade right up against that market structure failure, breaking the previous bullish structure. That little window there, the fair value gap, big dump. Hell, you might even argue there's another one of your fair value gaps. And you could have probably even done like a study off of there to there. And then there to there, and where is a mountain man tag of that range? And that wouldn't surprise me if it actually set up another trade. So let's see where that comes in. Oh, look at that. Oh my goodness, that's ridiculous. So there's another one. I mean, I would do yourself a favor and pay attention to this guy's setup, because I tell you, it fires a hell of a lot. So I don't think it should surprise anybody. We rallied right back up here, filled in this big dump candle, the fair value gap, and of course started to roll back over. Point I suppose here is, why? I think a couple reasons. As I said, we do have this big monthly options expiry coming up. Always a good idea to ask, where is the maximum pain going to be inflicted in the marketplace? Keep in mind, a lot of people buy call options. So you can see up here, the 522 calls, right? The market's sitting for 514 right now. Look how many people are in this 522 call. Holy moly. So whoever bought these calls, they probably did not want them to expire in the money. And notice they got 77,000 of the 520s. These are all going to expire worthless. And notice, as we go further and further down, the open interest starts to back off. I don't know whether they can bring the market all the way down into these levels. If they do, then on the call side, this is just going to be a massive home run if they can get the market to go out down below here. The question ultimately is, because keep in mind, institutions write about 90% of the put options. So where is sort of the max pain with regard to puts? And you can see, if they keep the market up top here, all of these put options all expire worthless. My hunch here is that they probably want to make darn sure that this thing doesn't go out below this 510 area. If they have the market up here, let's say they take it out here at 514 and change, then these are the only options that they have to pay out on the puts. That expires, all of these all expire worthless. And the interesting thing is if we probably look down the chain, you're going to just see an absolute staggering amount of put options that are all going to expire worthless. And I have a funny feeling that today is actually the day that they like to do this, the Thursday, the day before the big monthly options expiry. So I think that's what's going on here, primarily Thursdays. And then, of course, people wake up tomorrow with the options expiry, get the notices, your options are expiring. They pull up their account and they go, well, it turns out everything's worthless. So on the put side, you can see, all of these puts clearly, that there, that guy there, this guy here, that guy there, that big one there, all of these, that big 50,000 there, 48,000, all of these options are all going to expire worthless. And of course, that's exactly what Wall Street wants. Notice on the put side, look what happens when we actually get up here. These are the options that are going to expire in the money that Wall Street is going to have to pay out on. Do you think Wall Street's going to take any pain here at all? No, none. So in a weird sort of way, I actually don't think that the bleeding is going to go much further. because you can see if they start bleeding the market out, then they have to actually start paying out on these puts, and I don't think they want to. So, thank you, sir. That's what I think is actually driving the market here. Of course, you're never going to hear anybody in the media talk about this because, frankly, they don't understand it. What are they going to blame it on? You open up the newspaper, and this is the reason du jour. And as Chris had pointed out, although I don't know where I have it on here, um, but as Chris had pointed out, what's the headline that they're going to say this justifies the market coming off? Well, U.S. producer prices rise more than expected. Now, we've been hearing about this for quite some time. You've heard me endlessly going on about how I think there's no way in hell the U.S. Federal Reserve is going to lower interest rates anytime soon. And in fact, you could even make an argument with the way the stock market is acting, pressing to new highs and the whole bit. There's no way the Fed's going to act in the face of that. They're just not going to lower rates. If anything, if this insanity keeps going, they might even raise rates. And now you could actually make the argument this isn't an argument for them to raise rates. The numbers aren't really that ugly, but they're just sort of more of this. Powell's been saying this recently. The data is sticky. Yes, it is getting better, but we just want to see it continue to get better. We don't want to see it deteriorate because I can absolutely guarantee you the moment they take their foot off the gas pedal, the inflation numbers are going to come screaming back. It's just this is the way inflation works. And they always say it's cost push, right? So all the costs, you've heard, them barking about supply chain management issues. Of course, the days of China supplying the world endlessly with cheap products, those days are over. The cost of our lives have gone up. Now what you see, and I mean, hell, I went down to California a month or so ago and I saw it in glorious Technicolor. People working at fast food restaurants are now legally, you have to pay them like $25 an hour, which of course is absolute stupidity. That is going to be your demand pull. And we've talked about this at length. 1947, 1948 was the second wave of inflation in that particular cycle. We also saw it in the 1980s to a certain degree. But I believe 2027, 2028, we're going to get that second wave of inflationary pressure where wages, they have no choice. Minimum wage might have to go up to like $50 an hour just to keep pace. So the point here is that the numbers are not coming off. And I also heard too that some of the internal data, let's deal with the inflation numbers first. So the producer price index, or basically what manufacturers and wholesalers have to pay, you can see that it came in quite a bit higher than expectation. Now, we've talked about this of late. Energy prices have been moving up dramatically. So, crude oil is back above $80 a barrel. And of course, the headline number, which you see PPI, this takes into account, of course, things like food and energy prices. The Fed, of course, they like to follow their core rate, so core inflation, core CPI, core PPI. That tries to remove food and energy inflation, deflation from the equation. And you can see it's basically coming in at their expectations of the forecast. So we're not getting anything at all that suggests that the Fed could lower rates. The question ultimately here is, does the Fed have to aggressively raise rates? And really, I hate to say it, it's just really a function of what does this silly crude oil market do? Volatile food and energy. Well, this energy market has been moving up appreciably, basically since the end of the year. You all know how the seasonal trade goes. Look at that. If you bought your energy middle of February, you're supposed to sell it the middle of May. You made money 9 out of the past 10 years. If we do silly things like fog and bombs off of that very wide bottom, that should give us some idea of where we should expect this thing to go up to. And you can see we still got probably another 5-10% price appreciation to go here. And we're nowhere near May. The seasonal trade is selling in the middle of May. So you put it all together, I don't see this inflation problem going away anytime soon. And there's no way in hell the Fed's going to be able to cut interest rates in the face of this very inflationary component of our society continuing to push higher. Yeah, hopefully it doesn't translate into core inflation, but the headline numbers you can see they're moving up dramatically. Again, can the Fed go and cut rates in the face of this? No frickin' way. Now, you might even argue if this gets a little out of control, we're going to start seeing these energy prices start to translate back into the market here. And of course, we don't need to talk about geopolitical issues, but, there is a big election. Yeah, right. In one particular very aggressive country right now. If that election finishes, do they start ramping up and getting even more aggressive? And of course, we're coming into the spring planting season. And is that going to start affecting things like wheat prices, which have been relatively tame lately? Does that start catching a bid after sort of the political event here comes and passes in March over there in Eastern Europe? Yeah, well, only time will tell. So put it all together. The inflation problem is still very much present. It has not gone away. And I think that's half the reason why you see the stocks kind of not very happy. But at the same time, too, you can see that the US consumer is feeling that pinch. In our last report, we had a really big drawdown. So, if anything, it's encouraging that at least we have a positive number. But you can see the retail sales numbers coming in less than expectations. And frankly speaking, I think the consumer is getting a little tapped out. I can tell you, even me personally, I feel like I'm getting tapped out here. So, if I understand correctly, I think I even read a headline here earlier today that said that things like tax receipts are coming in way, way lower than previous years. So you can already start to see the anecdotal evidence. I can't remember where I saw that, but the point of the matter here is that the consumer is starting to feel tapped out, and I think that that's going to start being reflected in the broader market here going forward. And I think I'm probably just going to leave the public broadcast at that. As I had said to sort of start off the broadcast, I think most of what you're seeing in the market today is all about the options expiry. Having said that, we are getting awfully late, whether it be equities, we have this big celestial event coming up here. We are coming up to big price objectives. And then, of course, if we want to talk crypto, we know that there's a big fundamental event coming up here. I think if anybody in this space is complaining that they haven't made any money, you got to be kidding me. I mean, whether it be little old lady portfolios, whether it be Solana, whether it be fundamental investment portfolios, whether you own Bitcoins, you should be over the top happy with your performance. Coming in on the buy side here now, though, come on, people. Let's not be a little bit silly here. And actually, I would like, and I think it would be healthy if we spend the next few months actually cleaning up this space. We're not there yet. Usually this tops out about a month or so ahead of the halvening. It could be over the next couple of weeks. There still could be some more fireworks here. But I think to all intents and purposes, we're getting very, very close to the end of this run rather than the beginning. So, just try and keep that in mind, folks. Don't come in FOMOing up top here. You're going to get your head handed to you. All right. Have yourselves a great day. PMA for the win. Suppose we'll do another broadcast tomorrow on the actual options expiry, and then we'll head into the weekend and do an offering for you there on Sunday with the Broiler Chicken Show. All right. Have yourselves a great day. All the best. And bye for now.